Welcome to Indianomics. The Reserve Bank Governor said recently that India's second quarter GDP will surprise on the upside. Now, just a little after he said that statement on October 31st, the government released the September tax data and the September core sector data. Let us see if they look like we are in for a positive surprise from the economy. First, the gross tax revenues. For July, August, September, the gross tax revenues have grown by a whopping 27.8% compared to just 3.3% in Q1. So that gave a very decent first half average of 16.3%. That is the growth in total tax revenues, gross tax revenues. Now let's come to direct taxes because that gives a better picture of economic growth. In terms of corporate taxes, if you see, whereas in Q1, corporate taxes fell by 13.9%, they grew by a whopping 45.8% July, August, September, giving a decent first half average of 20.2%. Remember, this is when the nominal GDP growth for the full year is expected to come only at 11%. Now let's look at income tax. They were good even in the first quarter. First quarter, it was a growth of 11%, but the second quarter, July, August, September, the Q2 that we are discussing, 51.2% growth, steaming growth in income tax, giving a first half average of 31%. So excellent upsides as far as these are concerned. Now let's come to core sector. Core sector data clearly indicates that while Q1 was a decent 6%, Q2, July, August, September, the quarter the governor was referring to, the growth is a great 9.68%. So to conclude, the tax data plus the core sector numbers show that the quarter is likely to surprise on the upside, show that the governor may be right in believing that the second quarter GDP may be higher than the Reserve Bank's own forecast of 6.5%. In fact, we at CNBC-TV18 did a snap poll which showed that 60% of the economists have upped their Q2 GDP forecasts just recently in the last 1 month, and most of them are averaging around 6.7 to 6.8%. The reason they said includes the good tax numbers, decent corporate results so far, and a surprising strength in the US economy, which grew by 4.9% in the July, August, September quarter. Well, if the Q2 GDP is higher, will the full year GDP also have to be revised higher? The Reserve Bank now stands at 6.5. What if the US and the global economy slow down sharply as the higher rates increased by the Fed hit home? For these and other questions, I have with me three well-known economists, Pranjul Bhandari of HSBC, Kaushik Das of Deutsche Bank, and Nikhil Gupta of Motilal Oswal Financial Services. Gentlemen, and Pranjul, thank you very much for joining me. Pranjul, to you first, what's your sense? Are you also going to or have already revised up your Q2 GDP?
Thanks, Latha. I completely agree with you that data in India looks extremely robust. The tax data that you discussed is not just that. Yesterday's PMI domestic orders were extremely high. And then if you look at things like real core imports are extremely high. So across the board, very good data. But, I want to take a step back before I comment on GDP, which is that, a lot of the GDP data has a few problems in it. For example, the first quarter GDP was 7.8%. I'm fairly certain that nobody believes that that's the actual growth on the ground because there was a lot of base effects. Since the pandemic, first half of the year has a very low base. And if you remove these base effects, you remove some of the deflator issues. My sense is the first quarter GDP growth was closer to around 6.2% and not 7.8%. So yes, if you're going to go with what the CSO has come out with, I do agree first quarter will be it was 7.8%. Second quarter will be closer to 6.8%, which the RBI is now thinking. It put it out in its nowcaster model. It's higher than what even the RBI had thought earlier. But if you remove these base effects, then my sense is that in both the first quarter and the second quarter, growth is closer to about 6.2%, which in itself is a very strong number. But, it's cleaner. It's very important to think about it like that.
No, I agree with you. I remember that the fall of the total GDP amount in the first quarter from the Q4, Q1 is always lower than Q4, but it's normally 2 to 4%. But in 2023, the difference was, I think, 7.5%. So clearly, the Q1 7.8 was a little overstated, or so it seemed. Nikhil, to you that question. You know, we did note some weakness in the Q1 GDP as well. But more importantly, look at the savings data, something that you have written about. That also is looking extremely worrisome. So do you think we can just be very confident about the tax numbers and revise higher? Where do you stand?
Thank you, Latha. So Latha, first, so the question that you asked, Pranjul, yes, we have also revised up our numbers, and we believe that, I mean, we revised it up to 6.1% after Q1 data came out in August. So in September, we revised it to 6.1% for Q2, but it looks like it could really be 6.5 or 6.6% for Q2, which is where the RBI is. I think 6.5% is their projection, but it would be higher than where we expect. To answer your
so what's your
question,
so what's your Q2 now standing at?
So we revise officially only once a quarter. So the next revision will be in December after the Q2 data comes out. But it definitely looks like it could be closer to 6.5%, not 6.1%, which is our official forecast.
Okay, okay, but you're not worried that data like savings data. I mean, there are some holes, and even that Q1, it was not a very convincing set of numbers. So any holes that we should worry about, red flags?
There are, Latha. So first of all, Q2 definitely will be better than our expectations. But as far we talk about the later half of Q3 and definitely the Q4 or the beginning of the CY24, we are not so optimistic. Okay. We are not as optimistic as the RBI is, or generally the market consensus is. We still believe that the US economy will see a slowdown going into CY24. It is highly unlikely. I am not still in the camp wherein I believe there will be soft landing or everything will remain as normal even 1 year down the line. So we believe our forecast for Q4 FY24, India's GDP growth is closer to 4.5% because we are expecting a US slowdown.
Okay.
That is one. Secondly, again, on savings, we all know that if out of your income you're consuming more, it will lead to higher GDP growth. But it also means that your income is not growing enough. Then you are eating into your savings and you're taking more borrowings, which is exactly what we need.
Nikhil, I'll come to the second half in just a minute. I wanted to get your thoughts on Q2 first. Kaushik, the question to you is, how much better will it be? Several economists in my Snap poll said that it will be 50 basis point higher. So the expectation is what, 7%? Are you also convinced it's going to be better than Reserve Bank 6.5%?
Yeah, Latha, we have tracked the GDP numbers for a long time, and the 50 basis point upside surprise is nothing. So, I mean, we have often seen GDP surprising to the upside and downside. So, you get a 7% number, it will be not like a very big surprise.
Okay.
But yeah, I mean, what Governor Das mentioned, I think looking at all the hard numbers and whatever we've got so far, I think the risk is to surprise to the upside, and 6.8 to 7% is possible. Now, we know that there are a lot of idiosyncrasies when GDP data are announced, discrepancy, and other items which are confusing. But whichever way you slice and dice the data, the narrative that is building is that India's growth momentum has been quite resilient, even during COVID, and after that, the rebound. Whatever we have expected in each year, it has surprised to the upside. So to that extent, I will not be surprised if you get close to 7% number. But then the question is, can this momentum continue into Q3, Q4, as we head into a more difficult time period for rates remaining higher for longer, oil could be a concern. Then whether the private consumption that has held on to some extent, whether it reduces. Before election, do you see things slowing down on the private investment side, the last 2 quarters before election?
Yeah, exactly. So that is really the meat of the discussion now. How will the second half pan out? So let me start that with you, Kaushik. What's your sense? I mean, already we saw the IT companies saying that their headcount has been cut. Now, they have not sacked, but clearly they have not done replacement hiring. So, even for the first top 4 companies, the headcount fell by a good 22,000 people. So, global slowdown is already hitting us in some sense. What are your estimates for second half and therefore full year?
So second half, we are at 6% for October, December, but can it be 5.5%? It can easily be, 5.5%. We know that the festival demand is looking good, but, there are a lot of other headwinds which can offset that. Rural sector could be an issue with El Nino, risks. We had a patchy monsoon, so all those issues are there. So I think, October, December, we have 6%, which is similar to RBI's, but can it be 5.5%? It's possible. January, March of 24, I have a forecast of 5%, lower than RBI's, closer to 5.7 or higher.
Yeah.
If you remember that January, March this year, we got an upside surprise. We were all expecting 5.1 and it went to 6.1. So if you don't change anything, the base effect becomes negative. So January, March 24, you could actually end up getting a lower number. So all taken together, you could be somewhere between 6.2 to 6.5% GDP growth this year, which would still be very respectable because earlier people thought it could be below 6% when they were forecasting for FY24. So I think the second half will be obviously lower than the first half. And also remember that part of the growth is coming because of the real growth is because of the GDP deflator being so low in April to September. The GDP deflator on the WPI side will correct in the second half. So real GDP will not look as good as the first half that we got. So all taken together, we could still be at around 6.2 to 6.5 for this year.
Okay. Well, actually, I'm going to take a break on that note and then go to the other economists as well on the second half. Remember, when the RBI first forecast a 6.5% growth, they have stuck to their guns on that. There were several economists on the street with even 5.5%, and definitely a majority of them sub 6%. Now the average is moving well over 6% for the full year. But let's get that from our economists in a minute after this break. Welcome back. We've been discussing the governor's surprising statement earlier this week that the second quarter GDP would be an upside surprise. Now, the Reserve Bank's number is 6.5. So upside surprise, how much, and will there be an upside surprise? All the economists I spoke with, Kaushik Das, Pranjal Bhandari and Nikhil Gupta, our guests, agree that there is an upside surprise. But let me first take a quick snap poll as to where your numbers are. Pranjal, what's the latest number you have on Q2, you said?
I think the CSO will announce a number closer to 6.8%.
Okay.
But once you clean up for base effects, I think it will be closer to 6.2%.
So your number would be 6.8.
Yeah.
Okay. And Nikhil, you said your number could be 6.5, right?
Yes.
Okay. And Kaushik, you're going with?
6.8.
Okay. All right. So that's about the average that I got in my snap poll. But now let's come to the full year. Pranjal, what are the chances that the Reserve Bank's 6.5 will be bettered for the full year as well? Are we looking for an upside surprise?
Well, if it is 6.8 in the second quarter, the CSO's announcement, then, my sense is the full year average could be a little higher than 6.5, maybe 6.6 or something. So around RBI's number, but maybe a little higher. But this, in a way, bakes in some slowdown in the second half of the year. It basically bakes in that about a 5.9 to 6% growth in the second half of the year, which is much lower than the first half of the year, which is understandable. As in what we've seen in the last couple of months is a rise in oil prices. The terms of trade is not that positive for us anymore. We've seen monetary policy being much tighter. We've seen a rate hike of about 25 basis points, which will also impact growth in some way. There's a very interesting fiscal policy dynamic going on right now, which is that this year, the central government has incentivized states to spend upfront. So we've got a lot of growth impact already in the system. Last year, a lot of the spending had happened only in the last 2 months of the fiscal year. So this time, there's no extra growth bounty waiting for us in the last few months because a lot of the spending has already happened. And then there's rural, the fact that the El Nino, if it continues into the next couple of months, rural incomes could get hurt. So I think all of that will dumb down growth a little bit. But I don't expect it to fall very sharply. I think we are very lucky that we are one of the few countries which doesn't just have this cyclical problem. We also have some structural benefits going for us. I think the whole fact that we are now selling new products, high-tech goods, we are selling new services, GCCs, even though that's slowed, it's something new in the system. The fact that a lot more people are getting access to credit, there's a lot of discussion on if it's too much or not, but still, and I think all of these are structural things that continue to support growth. So some slowdown in the second half, but not a big fall.
Okay, but what's your sense, Nikhil? Is it not that, Indian economy is way more connected than we normally assume? Like I said, we're already seeing IT headcount falling. Who is to say that if the slowdown picks up in the US, there could be actually job cuts, not necessarily only in IT. And GCCs as well clearly are not hiring for the second half because of the uncertainty. So do you think the slowdown can be restricted to just what is baked in the RBI's numbers, or can it be sharper, Nikhil?
I am not very sure if the RBI numbers are actually incorporating a kind of US slowdown that we are talking about. And that is why our Q4 number is so different from what the RBI is projecting. Now, there is no doubt if the US economy slows down, there is a serious risk that our GDP growth in the fourth quarter, that is March quarter, whenever it slows down, if it slows down in March quarter or if the US economy slows down in June quarter, whichever economy sees a slowdown, there will definitely be an adverse impact on India's GDP growth as well. There is nothing like isolated or we are not working in silos. So yes, we will be impacted. And that is why our second half GDP growth is closer to 5% with 5.1, 5.2%, with closer to 4.5% growth forecast for the fourth quarter.
Oh, that's sharply lower. What's the Deutsche Bank wisdom? I mean, what are your global counterparts telling you, Kaushik? Because it's quite possible that there is an accumulated impact of the rate hikes in the US, and the resets will come sometime in 2024 for most of the loans, is what US-based experts keep saying. So is there a sharp downturn globally that you all are baking in, your counterparts are baking in?
So, Latha, first point is that India's sensitivity to global growth is about 40 to 50 basis points.
Okay.
What that means is that if there's a 1% markdown to global growth at any point of time from the baseline, then India's growth could slow down by 50 basis points. And whichever way, if it goes up by 50 basis points, India's growth should be 50 basis points higher. Now, over the last few quarters, what we have been seeing is that, the US recession is not coming. I mean, people are waiting for US to fall into a recession. US is actually growing at a much better rate than what you could have thought.
Very fast, yes.
Point, we think that, by first half of 2024, US will have a mild recession, but the recession is expected to be mild, not a very prolonged, deep recession. So US is going to slow down in the first half of 24. That's why at Deutsche Bank, we still have a rate cut from the Fed starting from June. And in the cycle, we are expecting about 175 basis points rate cut from the Fed from where we are today. Now, there's always risk that geopolitics and oil prices go higher and the Fed is forced to hike, maybe not in December, in January, things get postponed a bit, but we are still expecting US growth to kind of reduce and the Fed to cut rates sometime in 24. What has happened also in Europe that, growth has slowed down a bit and our European economists have brought forward the expectation of rate cuts from the ECB starting from June. And there also we are expecting 150 basis points of rate cut, in 25 basis points clip. So maybe what we are expecting in 2024 out of the rate hikes, probably, in 23, probably will come in 24. And, monetary policy always has a, big lag with which it affects the real economy. So maybe all the slowdown that we're expecting in 23 probably comes in 24 and India's growth could get affected to some extent in FY25 and remaining, better than anticipated in FY24. So I still have rate cut call for India in FY25 along with the, Fed rate, rate cut call for India along with the Fed rate cut call. But if the Fed doesn't do anything in 2024, if they do not change any policy rate, then we have to reconsider whether the RBI will cut rates or not. Otherwise, I think, you would have a scenario of growth going down, inflation more or less coming in the comfortable zone, and all central banks are able to cut rates at some point of time next year.
Yeah, so much depends on that soft recession, on that not so deep recession coming through. But at the moment, we're going to concentrate more on the domestic. So, Pranjal, a final question to you. In spite of the problems you enumerated in terms of, El Nino effect and already a rural slowdown, which has not quite corrected itself, plus likely global slowdown, you still think that there is an upside surprise to the full year 6.5? Is it not possible that the slowdown can be more serious simply because the government also may perhaps lower its capex spend and go over to more commercial, more revenue expenditure, probably some kind of a, the PMGKY kind of spending that it did in 2019. So are there chances that the slowdown can be even more serious in the second half?
Yeah, Latha, we are in this strange situation in which there are just so many different parts of the economy which are behaving differently. There's a rural versus urban split in which rural is not doing well. It's not been doing well for a while now for many reasons, but urban continues to do well. And within urban, it's not just the top of the pyramid which are doing very well, and we see them, their consumption patterns, etc. But it's also the mid-level. It's also a lot of people, small firms who are getting access to credit for the first time. So there's a lot of urban exuberance. And then there is cyclical versus structural. Cyclical, yes, there must be a slowdown because we have monetary policy that's getting tighter. We are getting a fiscal policy that's getting tighter because we are bringing down our fiscal deficit year after year. But on the other hand, we are seeing all of these structural waves of growth. For the first time, people getting access to credit, are selling new products around the world, which we never had in the past. So we're in this very strange situation. And like everybody else, I do agree that if the global economy slows, the US slows, India must slow as well. But the sensitivity may now be a little lesser on the downside than it was in the past, because we are one of the few countries which are also seeing this huge structural wind of growth at this point of time.
Okay. Well, let me end the conversation with a quick poll on what are you all currently expecting in terms of full year growth. Pranjal, you go first.
Around 6%.
Full year. Okay, so you're not revising that just yet. Kaushik, your full year?
We are 6.2%, and you can achieve that, with getting higher growth in Q2.
Oh, in spite of the 6.8 in Q2, you are at 6.2 in for the full year. And Nikhil?
So our official forecast right now is 6%, but because of better growth in Q2, it could be 6.1% or so.
Oh, okay, but all of you are still far away from the 6.5 that the Reserve Bank is positing for the full year. But on one point, all of you appear to agree with the governor that Q2 is definitely better than your own previous forecast, and probably a 6.8%. That's the majority view, not the unanimous view of our guests over here. A possible 6.8% in the second quarter will emphasize the fact that India would be the fastest growing large economy in the world. Well, we will take that 6.8 with both hands, but let me remind you that there are a bunch of economists who believe that it could be closer to 7%. On that optimistic note, we wrap up on this edition of Indianomics. Thanks so much for watching. More news and updates are lined up for you.